Hi, Warriors. Carolyn Tooley here, your financial coach. And today I would like to talk to you about W-4s. The reason I'd like to talk to you about them is because the whole format changed back in 2019, 2020. What really the biggest change was that you no longer see allowances. Well, why is that? Well, because in 2017, the tax law changed and we no longer can take personal exemptions, either for ourselves or for anybody else in our household. So since the tax law changed, the form had to change to coincide or coordinate with the new laws. So it's not necessary to fill out a new W-4 just because it changed, but you may find yourself in a position of needing to fill one out, and then you might look at the form and go, holy moly, how do I complete this? It was brought to my attention by a warrior, and I wanted to go through it and show everyone just what the changes were. So let me share my screen. Let me pull one up. And here's the new form. It looks a little overwhelming. Again, the reason why it changed is because the tax law changed. And I just feel like understanding why will keep us less frustrated. Finances and financial matters can be kind of overwhelming at times. Take a deep breath and we'll just go through this. Now, I also want to state, very important to know, you don't have to complete a new one. Every year, the form changes and has a new date on it. But back in 2019, 2020, and it's really irrelevant, it was changed, the whole format, to remove allowances because we no longer have exemptions for ourselves or for others. So there are 5 steps in the new W-4. Before I get started, I want to say again, you don't have to change it. However, if you are having to pay a lot at the end of the year because you underpaid, or getting a large refund because you overpaid, this is a good time to look at your W-4. Look at it and make changes. The other thing is, if you have a change in income, marital status, change in dependence, or deductions, all of those affect your taxes. If you need to change it, please know that it is different, and it may seem overwhelming at first, but we're going to go through it step by step. Again, I said there were 5 steps. Everyone completes step 1. Step 2 through step 4 are not necessary to complete unless they apply to you. Step 5, easy step. I can scroll. It's your signature and date. So step 1 complete. First name, last name, social, address, city, state. You choose one item in C: single, married, filing separately, married, filing jointly, or qualifying widow or head of household. So I'm Married, but I file separately. So I select that. If you're married, filing jointly, or qualifying widower. If you're not sure what to do, make sure you check with your tax advisor. I'm not here to tell you what to put. If you need individual help, please reach out to me and we can have a private discussion. Step 2, as it states, you only have to complete this if you have more than one job. So if you're single and don't have an additional job, then you don't need to complete it. What this form is going to do is use the information on the form. It goes to your payroll department. They take the information, and depending upon what information is put on will depend on how much is taken out for federal taxes. I didn't state that at the beginning, but this W-4 affects your federal taxes. So step 2 is if you hold more than one job, if you're single or you're married, filing jointly, and your spouse also works. So that's for 2 jobs in the household. Step 2, you can either select A, B, or C. A, you use the estimator on the website that's listed, irs.gov W-4 app. You use B, the multiple jobs worksheet, or C, if there are only 2 jobs. I don't know many people that have more than 2 jobs, so that would be the easiest selection, just to check there. Again, your payroll department uses this information. They put this in, and it automatically figures out how much tax should be withheld. If you're using the estimator, you go to the website that's listed here, www.irs.gov. I just clicked on the link and you can go through that yourself. Going back to the form, let me enlarge it. If you're using the multiple jobs worksheet, that's on page 3 of this form, you enter the result then in 4C. And I want to go through that multiple jobs worksheet if you choose to use it. So the instructions are here for either 2 jobs or 3 jobs. If you have 2 jobs or you're married filing jointly and you and your spouse work, we already know that's the reason you would be filling out step 2. And this is B section. So it instructs you to go to page 4 and use the higher paying job row and the lower paying job column, and then find the value at the intersection and put that dollar amount in line 1. So if we scroll down to 4, and let's just do a hypothetical higher paying job of 10,000, or excuse me, lower paying job of 10,000 and a hypothetical higher paying job of 30,000. The intersection of those two is 2,090. So in this example, then I would put 2,090 here. I'm not going to worry about calculating the 3 job because in this example, we're not going to look at that. But if you did have 3 jobs at the same time, you would complete 2A and 2B and 2C. So we're going to skip down to line 3, number of pay periods. If this is reflecting someone who works at the nation, it's been 26 pay periods. Then you divide that amount, the 2090, by 26 to put the line in line 4. So we're going to take 2090, divide that by 26. That equals 8038. And I always like to say the IRS does not care about cents. And I don't know if that's common sense or just sense, but that's just my little underlying joke. So we're just going to put 80 there. And then as the instructions say in step 2B, we would also list that on 4C. So what is that saying? That's saying that you want that additional amount held from your paycheck because you don't want to pay at the end of the year. So that's extra withholding. You don't even have to use the worksheet. If you know you want an additional $80 or $100 or whatever dollar value amount, you can list that on 4C. The worksheet is just a tool. So again, we're still on step 2. You can either use the estimator, use the multiple jobs worksheet, or just click the box if you have similar pay. So the IRS is giving you these tools to use to determine if you need extra withholding taken out. I hope that makes sense. Now we're complete step 2. Step 3 is only if you have dependents and if you're in the income bracket listed. Step 3, claiming the dependents, has to do with your child tax credit. When the tax laws changed since 2018, the tax credits have been $2,000 per qualifying children, as long as your total income is $200,000 or less, or $400,000 or less if married filing jointly. So on this section, you would multiply 2,000 by the number of children you have. So hypothetically, if we had 2 children, I'd put 4,000 here. If I had another qualifying dependent, say an adult parent that I was classified as a dependent, I would put 500. That's if you are taking that credit and they fit the qualifications. Consult with your tax professional. Filling that out, I would put 4,500 here. Again, this is only applicable if you have dependents. If you didn't fill out step 2, that's okay. You may be single with one job. You may be married and your spouse doesn't work, but you still have dependents. Complete this. Essentially, what this is saying to the computer system that this is all input in, that you are eligible for that tax credit. And instead of getting that paid to you at the end of the year, they will take less tax out based on that tax credit. I hope that's making some sense. Step 4 is optional, other adjustments. So if you have other income not from jobs, let's say you do some contract work. Let's say you have things that you make and sell, and you've begun to sell them. Well, there are ways to pay that tax because the IRS tax you on every income you bring in. You can either increase your payroll tax or you can make an estimated tax payment. The thing is, you want to make sure that you do not underpay your taxes, because if you underpay your taxes, then not only will you have a big tax burden at the end of the year, you'll also could possibly have a penalty. I reiterate that. Again, this form doesn't have to be completed, but if you're having a change of income, change of dependents, it's good to look at it. Step 4, optional deductions. If you expect to claim deductions other than the standard and want to reduce your withholding, you can also use a worksheet. Or if you know exactly how much in deductions. So let's go down to the worksheet again on page 3. And here's the deduction worksheet. So if I calculated my deductions, and your biggest deductions are your mortgage interest, mortgage taxes, and charities. And if I just did a quick calculation and they were lower than any of these 3 categories, whichever category I fall in. So if I'm single or married filing separately, my standard deduction is $12,550. And if I calculated my deductions and I only came up with 10,000, well, I'm not going to include any extra deductions. But let's just say my deductions are 22,550. So the difference, what I would put in is my total deductions here and my standard deductions. Of course, I made it very easy. The difference between the two is 10,000. And that would be the amount that I would put on this line. So what that is telling the payroll system is that I have additional deductions, and based on that, they're going to take less out of my check. My check will be bigger. That's less federal withholding. Now, if I don't have those deductions and I take the standard, I would not list anything here. This is an estimator. It's giving the payroll system an opportunity to estimate the right amount based on your credits, as in step 3, based on other income. The more you make, the more that needs to be taken out because you don't want to underpay. Based on extra withholding, if you want to pay extra in because you don't have enough deductions, you can list it here in addition to whatever you listed if you followed that step in step 2C or 2B. So it sounds confusing, but take it step by step. If you have any questions, please reach out to me. I can help you walk through it. Now, I want to really emphasize this is not required for you to fill out a new form. I also want to emphasize the importance of completing one, especially if you pay too much during the year and get a large refund back, because no one overpays any other bill, say a utility bill, your phone bill, just to get a large refund. The biggest reason people like the refund because it feels like a bonus. But in actuality, you could be using that money during the year. It's not that the IRS likes you better and they gave you a gift. You just gave them too much during the year. So take advantage of these credits or the deductions you have and list those amounts on your W-4. There's not an easy way to tell how this form actually changes, because depending upon what you change on it will depend on what it is. And I'm trying not to make this too complicated, so bear with me. Now, I talked about overpaying and getting a large refund. When you underpay your taxes during the year, you will have to pay at the end of the year. And unfortunately, if you underpay by too much, you'll have to incur a penalty. And I think that's why most people are afraid and they just would rather overpay. But generally, most taxpayers will avoid that penalty if you owe less than $1,000 in tax after subtracting your withholdings and credits. So if you owe $400 or $500, it's not too bad. But if you owe $3,000, $4,000, $2,000, it could incur a penalty. However, if what you paid in income tax during the year is at least 90% of tax that's due for the current year, or if what you paid is 100% of the tax of what you owed the previous year, the IRS doesn't charge you a penalty either. So it's always good to keep it under that $1,000 amount that you owe, but also pay at least 90% of what's due for the year. Several situations happen. Again, if you have a change in income, a large increase, you have dependents that were added, or you weren't able to claim a dependent for the year. Perhaps your child reached the age past 17 and you're no longer able to claim that credit. If maybe your spouse worked overtime and enough tax wasn't paid out, or if you started selling something or took on a few contract jobs and they didn't take the tax out, you can use your payroll check to be able to pay those taxes, or you can make estimated tax payments. All of these items will affect your tax. I encourage you to review your W-4 if you get a large refund at the end of the year, or if you pay a lot. I'm trying to help you to avoid paying a penalty as well. It's not as easy as what we were accustomed to. That's because we were accustomed to just listing withholding allowances. Count 1 or 2 or 3 or 4, but it's really broken down into very simple terms. Every number, whether it's a credit or a deduction, will either give you more in your check, take less tax out, which would be a credit, or a deduction, which would also take less tax out, because they know you're going to deduct and reduce your income. Or if you have other income from jobs or less deductions and you want more withheld, you indicate that in the applicable steps. Step 5, final step, everyone completes that, sign and date it. Please let me know if you have any questions. Partner with me. I just didn't want you to be overwhelmed if you did go and fill this out. Once you fill it out, if you have a change, or if you know that you need to change something because you got too much back or didn't pay enough in and had to pay a lot to the IRS, review your W-4. Actually, you're not going to be reviewing your old one. You're going to fill out a new one. And then once you submit it and know when it gets applied to your next payroll, please check your paycheck. We're not accustomed to checking our paychecks. We no longer get the stubs. I used to, so we looked at that. I can help you figure out how to estimate your taxes that you've paid for the year to see if you're able to come closer to that midline. Our goal is not to have too much come back to us, because it's not that they're giving us a gift, it's our money. They're just paying us back, and not to owe too much. Again, those guidelines, as long as you're generally okay and can avoid that penalty if you owe less than $1,000 or have paid at least 90% of your tax due or 100% from the previous year. New form can be a little daunting, but no, it's very, very simple. And are you penalized if you don't put the information for the dependents? No, because that is a credit that gives you that money during the year. You'll get it at the end of the year. However, the IRS really discourages you from doing that because they don't like paying that out. I discourage you from doing that because you don't want to have a $3,600 check to you from the IRS, and you could have been using that $300 monthly to help you meet your financial goals. Comment below. Let me know if there were any questions on how I explained this form. Let me know if I can help you complete the form. If I can help you with estimating your taxes for the new year, how you handle something if you need to make a change. I'd love to hear back from you, and I hope you enjoyed watching this video. Have a great rest of your day. Thank you.